This is Trade Flow News, bringing you relevant news and insights from around the world. Trade Flow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
The volume of global crude exports in 2024 declined 2%, the first fall since the COVID-19 pandemic, shipping data showed, due to weak demand growth and as refinery and pipeline changes reshuffled trade routes. Global crude flows have been roiled for a second year by war in Ukraine and the Middle East, with tanker shipments rerouted and suppliers and buyers split into regions. Middle East oil exports to Europe declined and more U.S. oil and South American oil went to Europe. Russian oil that formerly went to Europe has been redirected to India and China. These shifts have become more pronounced as oil refineries have shut in Europe amid continued attacks on Red Sea shipping.
Europe's imports of liquefied natural gas, LNG, surged to an 11-month high in December, but the gain didn't come at the expense of Asia, which also recorded higher arrivals. A total of 10.89 million metric tons of the super-chilled fuel was imported by Europe in December, up 23% from 8.86 million in November and the highest since January's 11.18 million, according to data compiled by commodity analysts Kepler. The sharp increase in Europe's imports came as winter demand rose and ahead of the end of Russian pipeline shipments through Ukraine at the start of 2025.
Moving on to the top news in the energy sector.
China's Shandong Port Group issued a notice on Monday banning U.S. sanctioned oil vessels from its network of ports, according to 3 traders, potentially restricting blacklisted vessels from major energy terminals on China's east coast. The notice, shared with Reuters by 2 traders and confirmed by a third, forbids ports to dock, unload or provide ship services to vessels on the Office of Foreign Assets Control list managed by the U.S. Department of Treasury. Shandong Port Group oversees major ports on China's east coast including Qingdao, Rizhao, Yantai, which are major terminals for importing sanctioned oil.
Saudi Aramco, the world's top oil exporter, on Monday raised crude prices for Asian buyers in February for the first time in 3 months, after OPEC Plus extended production cuts for another 3 months and as Russian and Iranian supplies fell. Aramco raised the official selling price for flagship Arab Light crude by 60 cents to $1.50 per barrel above the Oman, Dubai benchmark average, a pricing document from the producer showed. This was up from a premium of 90 cents a barrel in January, which is a 4-year low. The company also hiked prices for other grades it sells to Asia. Next, we have the top news in metal markets. Antimony prices are likely to hit record levels as consumers seek alternative supplies following China's latest export ban, with growing trade tensions changing the dynamics around markets for critical materials. Last month, China banned exports to the United States of critical minerals gallium, germanium and antimony. Prices of antimony antlon, used in semiconductors and military applications, hit all-time highs, currently trading between $39,500 to $40,000 per metric ton in Rotterdam as of December 31st. Prices rose by around 250% in 2024.
Iron ore futures hit 7-week lows on Tuesday, weighed down by rising stocks of the steelmaking ingredient and disappointment over a lack of further monetary stimulus in top consumer China. The most traded May iron ore contract on China's Dalian Commodity Exchange ended daytime trade 1.38% lower at 750 yuan, $102.38 a metric ton. Earlier in the session, the contract fell to its weakest level since November 19 at 745 yuan and 50 fen. The benchmark February iron ore on the Singapore Exchange was 0.06% higher at $96.65 a ton, as of 0704 GMT. It hit its lowest level since November 18 earlier in the day.
We will now look at the top news in the agricultural sector.
Indian wheat prices jumped to a record high on Monday due to dwindling supplies amid robust demand from flour mills that are struggling to secure the grain to operate at full capacity, industry officials told Reuters. The record prices are likely to lift retail inflation, which eased in November after surging to a 14-month high in October, and could influence the central bank's decision on interest rate cuts. Wheat supplies are limited in the market. Even after paying record prices, flour mills are unable to secure enough to operate at full capacity, said A.J. Goyal, managing director of Shivaji Roller Flour Mills.
That is all for today's news on commodity markets. Stay tuned to Trade Flow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at Trade Flow News, which allows you to watch our program on your mobile device or desktop to receive information from there.